Because I was going to ask
Sure.
you, because apart from the manufacturing sector, we know that the small and medium enterprises are,
Sure.
they drive growth in the country. And
Absolutely.
so as much as possible, they should also be encouraged. So I know you were going to talk about the fact that you're not a bank.
Yes.
But is there, any arrangement made for SMEs in terms
Sure.
of access to funds?
Absolutely. It's in our 5-year plan. There is, we've been working on setting up an SME-specific fund that ends up investing in SMEs regularly. We've been working on that for almost a year now, and I think we're working on that in partnership with the Federal Ministry of Finance, because the level of funding we need for this is going to be very interesting in terms of the specificity of the fund. But it is hard for me to keep telling you about what we're working on. Let's just show them exactly like the way the reports have come out. The numbers are out there. We show them once we're ready. But SME is an area we are interested in supporting. But we will not administer it directly. We will invest in people who are experts in administering SME funds. And so we're going to create some funds, but a lot of that will depend, again, on the contribution we receive within NSIA. And the reason is because, you cannot, if you start to spread yourself too thin, you make basically no impact. And SME is a big sector. The capital level is small, but there's so many of them. So we have to be very careful how you approach it. But let me say something about SMEs. Look, there are many participants in the capital markets, or in the market, in the fund structure. NSIA is one, banks are another, the capital markets is another. People should take advantage of all three. We're not just there to solve everybody's problem, we're just one of the solutions, I believe.
Now, I know that, according to the act that set it up, there's the NSIA.
That's right.
You get funded by surplus income from the excess oil reserves. That's where it's deposited.
That is correct.
So we know that in spite of the fact that there seems to be, dwindling foreign reserves and the rest of it, we still have a substantial amount that goes in. So there's funds still coming in. Now, in terms of how you handle this money,
Sure.
who oversees it?
Okay, there is a board of the NSIA, and then there's a governing council. The governing council provides advice to the board. But the governance structure is very simple. There's a governing council, then there's a board of the NSIA, and then there's a management of the NSIA. So you have 3 tiers, or more importantly, 2 major tiers. There's a board, which is an independent board of 9 people, and that then helps set strategy for the NSIA. And there's a management who execute that strategy, like any other properly governed corporate institution. And the board has 4 committees, 5 committees actually, of which there's an investment committee, there's a risk committee of the board, who actually tend to look at the investments and give approvals on behalf of the board. So there's a proper governance structure. Again, you don't just show up from nowhere and get ranked so highly without having proper governance, and I think that's one of the things we've put together at the NSIA.
But then the NSIA now insists that Nigerians will have to pay for infrastructure financed from this fund. Is this the norm, or with other countries who have such a fund, or is just Nigeria?
So let's pay attention to one of the key words. It's Sovereign Investment Authority. When you invest, you earn a return. How do you earn a return? You earn a return if people pay for the service that you provide. Now let's look at infrastructure funding, and I believe that there's a lot that people have misconstrued over time about infrastructure funding. Many of you travel, and when you go to America, you drive up to a road, you pay toll, right? Yes, you do. Now, how was that toll used for? It's used to maintain and pay returns for those who invested in the road. That is one way. Healthcare, either through insurance or through direct payments. The reality is, at the end of the day, it's not a social fund. It's not a handout. It's an investment fund. The difference between us and any other person is because, again, we went through all the things that we believe are national priority, the level of returns that we will naturally push for. Sometimes we might, on the margin, consider social impact as well, and in terms of balancing how much we want to push for in terms of returns. But this fund will only be sustained by the returns it makes. Don't forget there's a running cost for running a fund, and so it is not something we just write checks and administer and expect nothing to come back. That's not a way to sustain it. Everywhere else, every sovereign wealth fund that invests in infrastructure invests for a return.
Now let's talk about the Future Generation Fund.
Yes.
What's the state it's at right now?
Well, that's actually been the one that's done extremely well, because most of the investments we've made, infrastructure will take time. Some of the infrastructure funds we expect to earn higher returns over time with infrastructure funds.
When you say over time, let's say to short to medium or medium to long term, are you giving yourself, what, 3 to 5 years, 5 to 10 years?
Oh, no. The Future Generations Fund has, there are 5 categories of investments we've made there. We've made investments in private equity. We've made 25% is going to private equity. We've chosen a few managers there. We've chosen about 2 or 3 managers. We'll have a few more that we're going to allocate capital to. We've made investments in equities. global equities, 10% in developed market equities, 15% in emerging market equities. We've also made investments in hedge funds. Some of the hedge funds are generating returns as we speak. The markets so far, investments have also been generating returns as we speak. Private equity sometimes is longer term, but we've invested in a mix of both primary private equity and secondary private equity. Secondary private equity generating returns as we speak. So most of the returns we've seen, the 1.2 billion naira in the first quarter and and slightly more than 1.2 that will be announced for the second quarter. We'll finish the books, so I can tell you what the numbers are going to be. Most of it is coming from the Future Generations Fund. I expect the Future Generations Fund over time, frankly, to be the core of the NSIA, in my opinion, and here's why. Let's not forget what this fund is about. It's to prepare this country for the eventual depletion of hydrocarbon resources and make sure that we leave resources for the future generations. Now, we have put 40% in the Future Generations Fund, 40% in the Infrastructure Fund. And the reason is very simple. We want to balance the need of the current generation, which is infrastructure, and that of the future generation, which is savings. So the two of them are running side by side, but I expect that over time we should see, and many CEOs later, many boards of the NSIA later, the Future Generations Fund to become the core, in my opinion.
Yeah, because you see, a lot of people feel that you have so much, well, you say that money isn't so much, especially since they're putting into 3 different funds and the rest of it. So they feel that, why save money I can't spend? I want to see this money, used for things I see every day, roads, other infrastructure projects and the rest of it.
Sure. If you did that 40 years ago, you would be asking that questions today. Do you understand what I mean?
So if we had established the NSI 40 years ago...
But we're comparing ourselves to our peers who have been established a long time ago. Let me give you an example. The Norwegian Sovereign Wealth Fund started in the mid-90s. I used to work at a firm. I used to work in London at a firm that co-managed part of their fund. At the time, they started with less than $1 billion. Today, they're at $840 billion. It's about the consistency of the contribution you make. Some people started, if you look at Kuwait, started in 1956. Today, they're at $250 billion. Look, you do not give money. And I frankly don't think you give money to the wealthiest. You give money to the most disciplined. It's a tool of fiscal discipline. It's a tool of making sure that 20 years from now, 30 years from now, look at your personal life. If you put aside 10% of your salary, 20 years from now, 30 years from now, you have a significant pool of capital to buy something very important. And that is how they should operate. People should look at this in futuristic terms. If we went back, when the first oil boom in 1974, if we started then, this will be a completely different story. And I think that is how we should look at it. Going forward, it's about what do we leave for the future generations of Nigerians. Look, we can spend it all today, but that is not being fair, because the same reason why the current generation is complaining. If we had done this 40 years ago, it would be a different outcome. So this is how people should think about the impact of the NSIA. It's about looking back and saying, this generation did something that left something for you. We're not just the ones that take something out of the ground and not put savings for you for the future. Hydrocarbon resources are not renewable. We both know that. Well,
you talked about seed money that Norway started with in 1974, $1 billion.
No, 1996.
No, 1996.
Well, in the mid-90s, yeah.
Less than $1 billion.
That's correct.
And the Nigeria Sovereign Investment Authority started with $1 billion as
correct.
well. So with all the investments you've made, what's it worth now?
Well, like I said, we started investing. First of all, it took us a year to put everything in place. We actually didn't start investing until September last year was when we started to invest. Net, I think now we've made, most of that is coming from having invested less than 50% of the funds, because the infrastructure side is not yet invested, right? We've only just made a few commitments. And so right now, I think we're closing the second quarter with a net expenses of over $14 million. And, again, you cannot straight line expected returns, but there are a few things we've done, and I feel very confident looking out in the second half of the year.
But let's take a quick break, catch our breath and come back. And when we come back, we'll talk about the investment that the NSIA recently did. That's between $200 million in the bond market of the United States. We had Credit Suisse and UBS and Goldman Sachs handle that transaction. So we'll talk about it when we come back. You're watching Business Morning on Channels Television. We're coming to you live from our studio here in Lagos, Nigeria. I've been talking to the Managing Director, Chief Executive Officer of Nigeria Sovereign Investment Authority. He's going to be here with me when I return in just a moment. Please join me again.